is I originally did the market structure video. For market structure, you want to create your market structure on the 15-minute, the 45-minute, the 30-minute, the 1 hour, and the 4 hour for long-term structure. It's all in the Discord group. And the second, guys, the thing I want to go over is today, here are order blocks. So in my group, as you know, we only trade order blocks and imbalance gaps. And this usually will come after you look for, after you've identified your market structure. So after you've identified your market structure on the time frames, like the 30-minute, the 45-minute, the 1 hour, blah, 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 then you're going to go down to here, and then you're going to identify. So, for example, if we have structure right here, this is how I got this trade today. If we have structure right here going in down structure, and we need to look for trades to make money on the top of the range. Why? Because the top of the range is the premium part of the range. And the premium part of the range is where price tends to sell off and smart money tends to sell off. Because when you're trading, smart money, which is the banks and institutions, they buy at discount prices. They're not going to buy down here. They're going to buy, they're not going to buy up here. They're going to buy down here. So if we're selling, we need to make sure we sell at high prices, which are called premium prices, and then buy at discount. So since we're selling, we sold at the top part of the range, which is the premium side, and we sold, we took profit at our low here. We usually take profit using double bottoms, double tops, and trend lines, but today we're only taking profit with the next high and low, because sometimes you have that. So here, this was a 15-minute imbalance gap right here, with where the arrow is at right there, and you can see there our imbalances. Our imbalance gap right here, as you can see, was right there. And our imbalance gap is just the gap between the candle and the next candle. So this is the real imbalance gap. But what tends to happen is price tends to come up and fill these gaps, okay? So that's one of our POIs. And so I basically entered there, and then on the higher time frame, which is the 45-minute, on this time frame, we had an order block, okay? So again, this could have been an order block trade, and how this could have been an order block trade was because when you're trading order blocks are just simply institutions and banks injecting money into the market through order blocks. And so since we're in down structure, in bearish structure, we had an order block ejecting money into the market, ejecting money into the market, selling off, going downwards, and leaving all this unhealthy price action. Okay, and so our order block also had high volume too, to give it an extra confluence. And so these areas are now target areas. These target areas now become points of interest for us. And like I said, our point of interest just stands for a POI. It just stands for areas that we're interested in, points of interest, areas that we're interested in trading, which are our order blocks and our imbalances. And we trade those after we've identified our market structure. So if we're buying in the market looking to make money going up, then we would look for up structure or bullish structure, higher highs, higher lows, and then we would look for entries at the bottom of structure at discount. So if we take a Gann box tool, and then we can draw a structure right here from our current high and our current low of structure. Our entry was at the top part of the 0.5 line, the 50%. So 50% of the range is the middle part of the range, which is where that green line is, at the middle part of the screen. And then at the top, we took our entry there. So that's considered the premium part, the premium side. And the same thing goes for order blocks, but slightly different. So for order blocks, you can see that line is also there as well, the Gann box tool. You can take it. It's called the Gann box tool in TradingView. You just take it and go like this and drag it from top to bottom of the order block. And then once you do that, you're going to take a line and then mark that middle line, which is a 0.5 line, and then you're going to go over and write on the line 50% order block, okay? And so this could have been an entry if you were looking at the order blocks, but for me, I was looking at imbalance gap. So sometimes there will be both an imbalance and an order block all in one. But if you were trading, and if you notice on the 45-minute that there was an order block here, you would have took trade at the 50%, because 50% of the order block gets filled usually. And what I mean by 50% is 50% of the small candle here, the white candle, not the black candle, the white candle, 50% of that candle. Because and that's just how it is. And that's just how I trade. 50% of the small candle And you want to look for order blocks that typically have minimal wick. This one has a wick, but the reason why I took this one because of how large it was. And the reason why this one's valid is because how large it was, because I actually took the trade on the 15-minute on the imbalance, which is right here. Okay? And our imbalance is the gap between this candle wick and this next, in the space between the next wick. That's the real imbalance. But here, I took it on the actual wick, so price can come fill that wick, and then the stop loss above on the gray box right there. And so in our group, you can come to the POI section, and if you look at here for the rules for order blocks and imbalances, let's look at order blocks first. On order blocks, we have the first rule is you need 2 large candlesticks engulfing one another, and we got that here. So if we looked at this on the 45-minute, we had 2 large candlesticks engulfing one another. Okay, the black candle was engulfing this white candle there. So the next one is minimal wick. This one had a wick, but for me, I took it because of the volume that the order block had, which is an extra confluence, and the fact that it's a big order block. So a gap / imbalance fill at 50% of the small candle. 50% of that small candle, which is that line there, was actually the gap. So technically, that's still a valid trade. And unhealthy PA, we had unhealthy PA because after this order block generated unhealthy PA downwards, and so did the imbalance gap. And unhealthy price action is usually a result of news, the banks and institutions moving the market. And so we had unhealthy PA. Our next rule is area completely unfilled. So in that order block and in that imbalance area, there was no price that came up here and filled it earlier, prior to this. There was no price to come up and fill it. So on the 45-minute, the same goes here. Before price reached here, there was nothing that filled up in this area until today. So and then your order block should be at the top or bottom of the range, and that includes your imbalance. That goes for your imbalance as well. Top or bottom of the range. So this was the top of the range, and what is our range? Our current high here and our current low there, okay? So if you want, you can actually go back in a group, and you can come to the POI section in the Discord, POI and POI5, and it'll actually explain what imbalance, what POIs are, entry rules, order blocks, all of that. And you can actually also go to the chart example section, and within that chart example section, you will notice that there will be a gallery of imbalances to take and order blocks to take. And so if you notice here in the order blocks, all these order blocks, 50% of that smaller candle, the white candle in this example was engulfing the black candle, and 50% of that black small candle got filled on the higher time frame in this image on the daily time frame. And here's another one. So typically you want order blocks to look like this, and we trade only order blocks and imbalances in this group. So imbalances, here's an imbalance right here. So imbalance is, like I said, the gap where price has to be filled. So in that gray box is the gap where price has to be filled. Okay, so it's the gap between the next candle and the last candle. So the next candle is right there, and the last candle is right here. And so this gray box represents the gap in between. But when you're actually looking for entries and entering off of it itself, I actually will mark it up cleaner than that. So by cleaner, I mean I will mark it up all the way to the actual wick instead of marking the gap. And sometimes price will come to the gap and not touch the wick and go down. But for me, this is just how I trade. I trade all the way. With the price has to come and actually fill the gap prior to. Some people would enter at the middle of this box and enter there, but I like to enter when it comes all the way down there. And if you have enough room in your stop loss and you can afford it, you can go ahead and just mark up that whole thing, and then you can actually enter in between this if you would like. So yeah, in the Discord I have tons of examples of imbalances, gaps, things like that, rules to the imbalances and gaps in the chart gallery. And you can also go to my daily and weekly setup section, and you can look at all the trades that I take and compare yours with mine. But yeah, guys, that's just a quick tutorial and just a quick little video on you guys for trading for POIs. Because the last video we talked about market structure, And you basically want to look for these trade setups after you've understood market structure. Okay, so this video is about POIs, points of interest that we're interested in taking trades in. And in this group, we are interested in trading only order blocks and imbalances based off market structure. Okay, and that's simple. If you guys have any more questions or want to know the rules, all the rules and details about the imbalances and gaps are in the Discord. You can literally go to the chart examples section, or you can go to the learn section, and it's all in here, guys. I hope you guys found this helpful. Let me know if you did. And yeah, so peace out. So remember, market structure is your first step. Then you want to look for your POIs, your points of interest. So your points of interest are order blocks, imbalances. I only trade order blocks and imbalance gaps, or some people call them fair value gaps, but fair value gaps are slightly a little bit more different than imbalance gaps. But yeah, fair value gaps, imbalance gaps, order blocks, those are the only things I trade. And yeah, market structure comes first. Are you bullish or bearish? And once you know that, you then want to look for, so if you're bearish, you want to look for trading, you want to look to trade order blocks and imbalance gaps at the top of the range, because you want to, if you're selling to make money in the bearish market, you want to sell at the premium part of the current price range. So structure is structuring price, and in our structure is our current price range, which is the current low and the current high. And then I took the trade here at the top of the range at that imbalance there, and it entered the stop loss there. And yeah, guys, it's that simple. It's really that simple. So I hope you guys found value at this video. I hope this helps. And again, don't be afraid to go in the group and look for and just look in the chart gallery for more about imbalances and order blocks. And I have tons of pages of rules and everything. And you can also just message me. And yeah, guys, I hope this helps you guys. And yeah, and if you're not in a Discord, go ahead and there will be a link in the description where you can just message me. It's not expensive at all. And hope you guys have a good day and do better on your trading. Peace.